Well, investors have bid stocks up in a big way in the U.S. since the election of Donald Trump. It continues to be a major theme in U.S. markets. Let's bring in David Dietze. He's managing principal at Peapack Private Wealth Management to get his view. David, what is your view of the fundamentals, leaving aside the so-called Trump effect? What markets are looking for in the early portion of a Trump administration? What do you think the macro backdrop looks like?
Well, I think it looks excellent here. I mean, earnings are scheduled to be up this year by about 10%, and analysts are forecasting another bump next year of 15%. Earnings are the most important indicator of stocks' value and perhaps direction here. The other key thing is interest rates. Now, we have a Federal Reserve which cut interest rates by 50 basis points in September, quarter point last week. They're a little uncertain as to the future progress, but by all accounts, with inflation abating, they need to reduce interest rates in terms of the federal funds rate in order to reduce real interest rates and prevent a drag on the economy, causing a slowdown in the labor markets and so forth. So you got another tailwind here. And as you pointed out, of course, that, you know, with the Trump election, one of the most important things determining corporations' profitability is the tax rate. We are facing, if nothing is done, a big hike on corporate tax rates at the end of next year. Whatever happens, it's going to be less than we thought would be likely the case before the election. So all those things are big positives going forward.
You say, among other things, steer clear of Bitcoin. We've spoken about that a couple of times in our show already, including with the CEO of a crypto exchange who, not surprisingly, is very bullish on crypto and its future. You think investors or perhaps even traders should stand back?
Yeah, absolutely. There's few things that I'm really sure about. And here, I'm pretty sure that Bitcoin is something you want to avoid. Here's why. There's no there. You know, the beauty of buying a stock is if it starts moving in reverse, at least you have comfort that the underlying company has some revenue, some profits. Maybe it pays out a dividend. There's a book value. There's nothing there behind Bitcoin, for example. Second, of course, there's this hope that somehow Bitcoin becomes kind of part of the U.S. government establishment for monetary policy, but I don't see why that makes any sense at all. The one thing the U.S. has going for it is the dollar is the linchpin behind the U.S. behind the global monetary system. Why would you want to do anything that might upset that apple cart? Of course, further, one of the nice things about being a country is you get to issue your own currency, and that gives you tremendous control over interest rates, over inflation, over economic growth. Why would you give that up to something that's not under your control? Now, I realize that President-elect Trump has made a lot of promises to the crypto community, and, you know, quite frankly, a lot of politicians are making a lot of promises about everything to get elected. We'll see what happens. But at the end of the day, I think not as much is going to happen that's been reflected in prices. You look at a parabolic chart, it's a meme situation. You want to steer clear.
You also think that stocks are overbought, valuations at their historic upper limit, and within that context, you prefer small cap stocks. And we have seen, of course, small caps begin to rally for a while now.
Yeah, absolutely. So, you know, in terms of the large caps, you are at the upper bands of valuation. Now, if the 15% earnings come through next year, that's going to help. But I mean, 15% is a big lift up. And if that comes short, I think that's going to be problematic. We do like the smaller caps because they are trading at lower valuations than the large caps. Normally, they trade at higher valuations. That's not the case. Now, you know, the fact of the matter is small caps haven't gotten all the appreciation they deserve. If you look back over the last 12 months, small caps, as reflected in the Russell 2000, they're up about over 40%. They're outpacing even the NASDAQ 100. Few people in the street there think that small caps over the last year have beaten the big tech stocks, but that in fact is the case. Why do I still like them? There's the valuation, but remember, they still haven't hit their all-time highs about 3 years ago, so I don't see them overly extended. Now, admittedly, we have higher interest rates here, but I do think there's a lot of things in the Trump agenda, which even if just some of them are enacted because of their domestic focus, because they don't have to worry as much about trade wars and tariffs, I think that they can continue to move higher.
One stock you like in terms of specific stocks is Genuine Parts. It's an auto parts distributor.
Yeah, we invest for the long term, and that's why I like Genuine Parts. This is the company that's over 100 years old, focusing on the auto parts with some exposure to industrial parts. They talk about dividend aristocrats, 25 years in a row of a dividend hike. They talk about dividend kings, 50 years in a row. This company has increased its dividend 68 years in a row. It's a monster with 11,000 sales locations, 60,000 employees worldwide. Now, here's your opportunity. Their third quarter report was not particularly good. They're seeing inflation in the supply chain. And of course, we know because of the higher interest rates, they're putting a big damper on auto sales and auto activity.